Achieving emotional control in trading. It sounds so simple, right? Yet over 95% of traders struggle with this throughout their entire careers. Many of us start out trading focused on methodology and strategies, and in our pursuit to find success, we essentially try to avoid losing, and we see our strategies as a method of doing that. So finding out what the best methodology is that can avoid losses is the number one priority for most traders. But as you gain experience over time, you start to realize losing is actually part of the game, and what makes a great trader is not a trader who avoids losses, but a trader who embraces the losses and is able to keep his cool under pressure each and every single day while trading his methodology. Now we're going to be diving into some deep psychological habits that have been implanted in our minds for millions of years since our evolution. And we're going to talk about the biological and psychological effects of these emotions and what happens when they arise in our trading when we are trading under pressure each and every single day. So there's two main habits that traders struggle with. One of them is fear, which is fear of pulling the trigger, scared of losing money. And the other is quite the opposite, which is overconfidence or lust or greed or whatever you want to call it. It's that trader who's a go-getter. They want to win and they are not afraid of losing, and they just want to get in there and make some money. Now, the two differences here are essentially the fearful trader is afraid of losing money, and then the overconfident trader is actually too aggressive and just wants to make a lot of money. And we have to find a middle ground here if we want to be consistent, profitable traders, because neither of these traders is going to see success in the long run. Now, sure, the more aggressive trader might make more money in the short term, as he is taking more risk and not afraid of losing, and the fearful trader is likely going to be break even or maybe losing a little bit of money due to his fear of putting on risk and just not able to see that exponential growth in their account. So we'll talk about the fearful trader first. What is going through their minds when they are trading under pressure? Well, the fearful trader may have taken some losses in the past, whether it was in trading, in their personal life, whatever it may be, and now they are very fearful of losing, and it may not even be related to money. It could be the fear of being wrong, the fear of losing money, the fear of losing someone you care about in your life. All these fears of losing come back from their personal life and attack them in their trading. And what triggers this is as simple as taking one bad loss in your trading career. That one bad loss can trigger all those pent-up emotions that you've carried with you throughout your life, and then cause you to become a fearful trader, which is, as we know, very inefficient for producing results in trading. So in essence, if we look back at our prehistoric times, we were cavemen and we were hunting, and our primary object was survival, short-term survival. Now, if you think about it, we're actually bringing that mind to the markets today. The mind cannot tell the difference between a tiger attacking you in the wild versus a trade that is going against you. It may sound ridiculous, but this is actually how your mind sees it. It's the same threat as being physically attacked by an animal back in our caveman days. And the only way we can get around this problem is by facing the fact that we are emotional beings and we will have these emotions arise in our trading. And what we can do is learn to catch them before they take over our trading. Now, here's the thing. You can look at your trading in hindsight. Maybe you had a really bad day. Maybe you just totally messed up, and in hindsight you can see exactly what you did wrong, But you're scratching your head and asking yourself, well, why would I do that? Well, because when you're in the moment, you're not really thinking. The logical and rational mind have been taken over by the emotional brain, and your emotions are in full control of your trading in that moment. So that is why you only realize it after the fact, because in the moment, your emotional mind is just fully in control, and you're just focused on survival. So one really helpful thing you can do is when you have these days where maybe you missed a trade, or you didn't pull the trigger, you were too scared, or maybe you took a trade and then you didn't stop out of it because you were afraid to lose, which caused you to lose more money. What you can do is sit down and actually journal what you were thinking and feeling in those moments. And this will help you tremendously, and it will help you understand what was actually going on in your mind. What is the root cause of these thoughts and emotions, and why are you thinking them while trading? And you'll get more data from your journaling as you track these feelings and these emotions. And over time, you'll start to understand maybe there's another underlying factor that's causing me to behave this way in the market. Maybe my fear of losing money is not so much a fear of losing money, but perhaps it's a fear of feeling inadequate if I don't make money. Therefore, perhaps I'm limiting myself and reducing my risk so that I don't feel bad if I strike out. And what you'll find is in trading, everybody strikes out. This is something you really have to accept and fully understand if you want to be a successful trader, if you want to be a full-time trader. Everybody takes losses. You are going to take a lot of losses in your trading career. And I don't care what kind of percentage of winning rate you have, how good your methodology is, you're going to take a bunch of losses over the course of your career. And if you cannot accept this, then trading is most likely not the job for you. If you're so afraid to lose that you can't even put on a trade, it's probably the time to consider a different career. However, if you're willing to change and you're willing to overcome this fear, some things you can do is reduce your bet size. It's probably the easiest and most simple thing you can do to help improve your trading. Now, people who are afraid of losing, typically they're already risking too much, even if too much may be only $50 or $100 per trade. For some people, that is actually too much money, and that's totally okay. And you have to be, willing to accept the fact that you may need to drop your risk even lower. It may have to go down to even $5, $10, maybe even $1 per trade, if that's what it takes. And I've seen traders that have had to do that. So if you're really serious about this, try out this exercise, simply reduce your risk, reduce your bet size, and see how your performance does, and see if it improves from there. And the other thing is, I think it's important to note that most traders who struggle with this fear, they simply just don't have enough skin in the game. They haven't taken enough losses or enough trades to really realize that, hey, this job is gonna, give me a lot of losing trades. And that's trading, you're gonna take a lot of losses. And I think, you need that screen time to really become comfortable with losing and realize, hey, this is not so bad. I'm losing, I'm taking losses, but, if your winners are bigger than your losses, generally you're going to make money over the long run, even regardless of your win rate. You don't have to have an 80 or 90% win rate to become profitable. You can have as low as a 40% win rate, and if your winners are at least double your losses, you're going to make money. So I think that really puts a lot of pressure off, the fear when you realize that. You realize, hey, I don't have to be right all the time. In fact, I can probably make more money if I'm taking more trades and opening myself up to more opportunities, as long as I'm controlling that risk and allowing my winners to work for me. So one thing that's common with fearful traders is they will come up with excuses to avoid trades. Even if they see their setup, even if it looks really good, they'll come up with excuses so that they don't have to, take that risk and potentially incur a loss. And, this is very common because traders just don't want to feel that pain of losing. And what this will do is, you'll be taken out of the opportunity flow every single day if you're trading with this kind of mindset. So you'll see opportunity, you'll see stocks moving, and you just cannot pull the trigger because you're so afraid to lose that you're making up excuses to not take even the best setups that work for your methodology and your strategy. So this one is definitely a problem, and you will really just flatline your trading curve if you stay in this mentality, because you're just going to avoid all risk, and you're not going to become a profitable trader if you can't put on risk. So the best thing you can do is, as we discussed, lower that risk, even if it's $1 per trade. And what you want to do is make a habit of taking every single signal that you get in your methodology. And, when you're risking that small amount, $1, $5, whatever it may be, you have less of an excuse to avoid the trade because you're risking so little. And what this will do is, once you start getting used to taking the trades with that small risk, you'll gain some more comfortability with it, and you can slowly increase that risk over time as you gain more comfortability, and you can bring it back up to where you want it to be. And this is the best approach to take if you're terrified of losing. You have to practice this. You have to put it into practice if you want to improve and get over this mentality. So then we have the overconfident trader. These traders, they get pretty good. They can make some really good money. But what happens is they get taken over by the lust and the greed, and they just self-sabotage, and they'll give away months of profits in 1 or 2 days. And this is very common. This is probably the most common struggle with traders is, they'll get pretty good at it, and then they'll just give it all back. And what causes this? Well, let's take a deeper look at it. So let's say you're a trader who's on a pretty good hot streak. You've had maybe 10 consistent winning days, or 15 consistent winning days, and you made a lot of money, and you're feeling pretty good, right? Now, one thing is you have to recognize how you're feeling in this moment. And here's where the problem comes in. A lot of the traders that are doing well, they assume they're not prone to any faults or any errors because their trading is telling them they're doing well. However, this is the most dangerous place to be when you're on a hot streak, because this is where those emotions can creep in slowly and slowly take over and hijack your rational thinking brain. And that's why you see traders go on really nice hot streaks, and then they just blow up one day and just completely throw out their rules and, just completely go off the rails. And it's technically a biological and psychological phenom, whereas their caveman survival brain kicks in, and, maybe they're trading a stock that's just not working for them that day. They're doing the same strategy they've done for the past several weeks or several months that's made them a bunch of money, and then one day it just happens not to work on a particular stock or a particular day. And what happens is their fight or flight instincts kicks in, so that caveman brain, it senses a threat, and when they're not right on the stock, they engage into fight or flight mode. And essentially there's two options here. One is you're either going to run away from the threat, so that's the fearful trader. They typically will run away from risk, run away from the threat. And then the alpha, the one who wants to make things happen, what they'll do is they'll attack the threat in order to defend themselves. So if a stock is not behaving, it's, let's say you jump into the stock, it stops you out. You jump in again, boom, stops you out again. 1, 2, 3, 4, 5 losses. You just take several losses in a row. That is what triggers you into that defense mode. And this is very important, because at this moment is where you can step in and stop it from progressing. In that very moment, when you recognize, oh man, my rational brain is just, it's not there anymore. I'm starting to feel I'm starting to feel that buildup, that aggression, that emotion. In that moment, when you recognize it, that is when you can step in, and here's the best thing you can do. Get up, get out of your seat, walk away from the computer, even if it's just for 30 seconds or 1 minute. And what this does is it actually disrupts the emotional brain from taking over the logical brain. And this is actually a fantastic exercise because all it takes is stepping away from the situation for a brief moment to reconfigure your mind and get back into that rational thinking brain. And you will be amazed at how well this works. Now, here's the kicker though. You have to catch it before it fully takes over, otherwise it's too late. If your emotional brain has taken over you, you're heading for disaster. You're going to blow your account. You're going to have a massive loss, and you better hope that your broker has a max loss to stop you. And even in some cases, some traders will actually rip off their broker's max loss. They'll switch it off and continue trading because that emotional pull is so strong. It's completely taken over them, and they will literally do anything it takes to get that money back and defeat that threat. They want to kill that saber-toothed tiger. They want to kill that threat, and that's exactly what's going on in their minds. So the disruption of this is the best thing we can do to prevent it from happening. Disrupting that emotional takeover by getting up, walking away. One other thing is deep breaths. Taking deep breaths really help to disrupt the emotional brain from taking over the thinking logical brain. And it's like a meditation. So you take those deep breaths when you feel that emotion building up, and combine that with walking away from the screens, and it will help you tremendously get over that emotional takeover. Now, this is something that's not very easy to do on your own, and it really requires practice and time. And it may sound easy as we're talking about it, but really it takes a lot of practice, just like anything in life. And if you really put your focus and emphasis on emotional control and those deep breathing exercises, and that getting up and walking away, recognizing when that emotion is going to build up and about to take over, that's what's going to allow you to finally overcome this and really have control over your emotions in trading. Because we can never stop emotions. We are emotional beings, and that's something you have to really understand and accept. If you're trying to fight your emotions, you're going to lose every time, especially in trading. So what you want to do is allow those emotions to arise, recognize them, whether it's anger, fear, regret, fear of missing out, fear of losing money, whatever emotion is arising in that moment. You want to be able to disrupt it before it fully takes over. So when you look at professional traders, the real difference between them and the losing traders is quite simple. It's not that they have a better strategy. It's not that they have the perfect, methodology that wins all the time. No, they've allowed themselves to create a mind that is open to losses and losing, and they've allowed themselves to think in a term of probabilities rather than the survival thinking. And we are all programmed by default to think in survival mode. This is why over 95% of traders lose. It's not because they don't know how to trade. It's not because they don't know what kind of strategy works. All that stuff is very, very simple to learn, and it can take as little as a few weeks or a few months of studying to learn that stuff. But what you see traders do is you see them focus so much on the strategy aspect of trading. Even after years of losing, they still think that their strategy is the culprit. And it's not until they lose enough money and feel so much pain that they finally step back and realize this is not about winning or losing. It's about me managing my expectations and my emotions in the stock market. If I cannot manage my emotions and my expectations, I am not going to be profitable, and that's that. Doesn't matter how good your strategy is. I don't care if you learn from the best trader in the world. If you cannot manage those emotions, you're not going to last very long in trading. And most traders will be stuck in that perpetual loop for an eternity. They may have the capital to keep trading, but they can be doing this for 5, 10, 15, 20 years and still not understand it. And that's because they're not focusing on the mental aspect. They're purely focused on how can I beat the market? What else can I learn? When in reality, you can't beat the market. You trade with the market. You go with the flow. You allow the market to present opportunities, and you make yourself available to take advantage of those opportunities. You don't know if it's going to be a win or a loss. All you know is you have a methodology that shows you win maybe 5 out of 10 trades or 6 out of 10 trades, and all you can do is take your signals and allow the trade to work out. So to really take control of our trading, you have to realize first that we are emotional beings and we are not programmed or designed to be traders. In fact, we're designed to be the complete opposite. So first of all, understanding that is the first step. And then the second step is to understand we cannot control our emotions. We have, very limited control over our emotions. So whatever emotions do arise, all we can do is disrupt them and, mitigate them, but we cannot completely get rid of them. That is impossible. And, if we lived without emotion, it would be pretty boring life. So, what we can do as traders is, disrupt those emotions as we feel them arising, practice techniques like deep breathing, getting up, walking away from the screens when you feel those emotions arising. These are absolutely fantastic ways to calm the mind and get back to that rational thinking mind. So essentially all of our problems in trading arise from our need and desire to be right. Whether that's fear of pulling the trigger, whether that's over trading and getting back at a stock, all these problems arise from our desire to be right in an environment of uncertainty where we cannot control outcome. The stock market is not a place where you want to come in with the attitude of, I'm going to make money and I'm going to be right and beat the market. The market will absolutely beat you down. It does not care how good you are of a trader. It does not care how badly you want to win. It doesn't care about any of that. That mindset may have been successful in business and other areas in your life, like relationships and making other things happen. But if you bring that mindset to trading, that mindset of wanting your way and wanting to be right, you have no chance at all. So thanks for tuning in, guys. I hope you enjoyed this one. And until next time, cheers.